Hello everyone and welcome once again to Treasury Hub GH YouTube channel. If you haven't subscribed yet, you should subscribe so that you would get prompt notice whenever we issue any of these interesting videos. So look, today what we want to do is very simple. We want to go into Government of Ghana's Treasury Bill Auction results, right? Try and understand what the auction is, how we interpret the result, and then also move a step further to sort of do a month-on-month analysis comparing the total performance of the T-bill auction or at the T-bill auction in April to the month before, and then probably to also January this year, just to paint a broader picture of where we've been and then where we've come as a market in terms of Government of Ghana Treasury Bill, right? So just stay with me for the next 14 minutes and we're going to walk through. But as always, before we proceed, we want to put this disclaimer out there that this presentation is just meant to educate the general public, right? And it's simply for information purposes only, right? We are not in any way giving you any opinion to buy, hold, or sell any financial instrument, including the treasury bills. So it's quite simple. This is purely for information purposes because we believe at Treasury Hub GH that we need to, as part of deepening our financial market, we need to make sure people are well informed, people are well savvy about our financial market. And then from there on, there could be, or there is a very high possibility of deepening our market and diversifying our financial landscape. So to kick things off, we just want to start particularly on the Treasury bill and then talk about some key features, right? So we have just itemized some 4 main features of Ghana's Treasury bill auction. Now, this auction is an avenue for government to borrow. Remember, we in our initial video this year when we're describing the Government of Ghana T-bills, we mentioned government uses this Treasury bill auction as a means of borrowing, right? Government can borrow either from the capital market by raising bonds or from the money market by raising Treasury bills. So this focus is purely on the money market and a test on the Treasury bill. Now, this issuance is done every week, right? So every Friday or every last working day, if Friday is a holiday, there is going to be an auction. And this auction is done through banks or what we call primary dealers. So what it means is that you as an individual, you as a corporate, you cannot literally just go to Ministry of Finance and then get these treasury bills issued to you. You'd have to go through an authorized primary dealer or a licensed bank to get it done. Now, in terms of tenors, if these treasury bills are issued for 91 days, 182, and then 364 days. So you can decide which one based on your cash flow needs, based on your interest rate, risk management. You can decide which tenor you want to invest in. But per experience, most investors prefer the 91-day bill because it's relatively short term and it aids in their liquidity and interest rate management. Okay, good. So now, before we dive in again, let's just take a few steps back and then look at how this auction or these auction results look like. So this is the very latest, which was done 25th of April, and it is to be settled on 28th of April. So this is how the results look like, and it's published by the Bank of Ghana on their website, on the main website. You don't have to struggle to navigate that. It's on the main website. So you just go there, maybe on Friday, 6 p.m. or 7 p.m., last working day of the week. You could get it latest by 7 p.m. or the next day. It should be ready, and it tells you what happened, you know, by way of amount tendered, by way of amount issued, and then in terms of it is done. So this auction is done via what we call a Dutch auction, where it is competitive. So someone might offer to say, okay, I can lend to government at 15. Someone will say 15.5. Then in the end, government will decide if I should accept the 15 or I should accept the 15.5, right? So that's how it looks like. And then on the very far end, after government accepts the band, right? Government can accept 15, can accept 15.2. They find a weighted average, which becomes the clearing price of those securities. So for instance, case in point, for this auction, you realize that the 91-day bill, although the interest allotted, it was allotted between 15 to 15.5, the weighted average is 15.32. Same thing for the 182-day bill. You realize that the allotted was between 15.6334 to 16.1578, but the weighted average is 16.03. That's the uniform clearing price. So this is how it looks like. If you still want to understand this particular auction in details, you can check out our video we did earlier this year. We've done a vivid explanation as to how this auction results can be interpreted. Today, the focus will not be so much on interpreting the auction results, but you can always check that out in our previous videos. Okay, so now to the main discussion for today, where we look at the month-on-month performance or month-to-month occurrence at the Treasury Bill auction. So what we've done now is we pick all the auctions that happened in March, we picked all the auctions that happened in April, and then we've tried to come up with some interesting analysis to sort of judge government behavior and then judge from an investor perspective their posture as well. So on a month-on-month fresh borrowing, and by fresh borrowing we mean that so every week there are maturities. So let's call it 5 billion could be maturing, and then government borrows, let's say 5 billion. Then it means that there hasn't been addition to borrowing because whatever was maturing has been rolled over. But there could be instances where there could be 5 billion maturing, but government would only probably raise or borrow just 4 billion. And in that case, debt has been reduced by 1 billion. It could be increased where government borrows 6 billion to refinance, say, 5 billion maturities, right? Okay, so with this, in the month of March, after all the auctions were concluded, total maturities were 29.6 billion. Government raised 29.9 billion also in March. So this increases or brings fresh borrowings of about 158 million, right? So let's say in March, 158 million was added to the debt stock. Now let's look at where it gets very interesting. In April, where 22.6 billion, or let's say 23 billion was maturing, and government only issued 20 billion. So in true sense, then government has actually reduced fresh borrowings or reduced the debt stock, because there was 23 billion and now you've only rolled it over to the tune of 19.7 billion. Now, there are a number of ways you could unpack this, right? Because you need to look at it in tandem with the bets that were tendered, because it could be because government borrowed lower, not because it wanted to borrow lower per se, but probably because investors didn't come for the auction, right? Let's see if that was the case. So we look at investor turnout for the auction. Again, March, out of the total 29.8 billion issuance, total bids submitted, and this is the highest we've seen, I think, since Treasury Bill auction started, right? 47.5 billion was how much was tendered. And in all, because government only accepted 29.8 billion, the issuance is 17.6 billion. So rejected bids were 17.6 billion. Now in April, a much lower issuance, a much lower tendered bid. So tendered bids now were 24.6 billion, but even with that, government accepted 19.7 billion, also leading to 4.8 or 4.9 billion worth of bids rejected. Okay, so now let's move on and then try and look at what cost did these issuances come at. So like we mentioned earlier, there are three tenors. Now for March, right? As of March, the 91-day bill was 15.71 in terms of interest rate. Now, in April, it fell by 2.48% to 15.32. The same way for 182, which saw the steepest fall, also fell from 16.73 to 16.04. And then last, the long duration 364-day bill also reduced from 18.84 to 18.37, reducing by 2.52%. Now let's compare this April to where we started the year. Now on the 91-day bill, we started the year at 28.19. So there has been a 46% drop in T-bill rate on the 91-day bill to 15.32 we see now. The same way for the 182-day bill, there's been a 45% drop, right? From 28.92 to 16.07, almost half. So in all of them, almost half of the interest expense has been cut off. Last but not least, the 364-day bill, which was 30.15, also reduced by almost 40% to 18.37. And this has been the yield performance when we look at how we started the year versus where we are ending April on. Right, so guys, this was very just brief. We just wanted to throw more light on month performance and see how cumulatively or in an aggregate form how government has fared in the various auctions. And we'll be doing this every month. So now April is out of the way, we are welcoming May. We'll see what government does in May, and then by end of May we would aggregate everything and then compare similarly to what we've seen in April and then to where we started the year. So guys, thank you so much as always for joining us. And if you haven't subscribed yet, please do so. Kindly drop us a like, and you can share as well. If there's any suggestion, please let us know. We are available on all social media handles. Thank you so much and have a good day.